Well, I think it's just a negative, another potential negative in terms of, putting some selling pressure on individual investors who are generally overweight some of the stocks with the biggest gains in, tech, mega cap tech. I think that's another area where we could see some anticipatory selling ahead of this potential hike in capital gains. We do some work every year looking at kind of the most crowded stocks by individuals, institutional managers, and hedge funds. And what we're finding is that they're all kind of converged into that same subset of mega cap tech leadership that we've seen just crush it over the last 10 years. So if we do see this demonstrable increase in capital gains rates, the idea of, liquidity seeking investors, having to pay a significantly higher proportion of taxes on gains really put some pressure on those holdings. So I think that's something to watch as the year progresses. This was a risk we highlighted late last year. And It's interesting because now all of a sudden the market is starting to pay attention to these tax risks that have been around for a while. So I think it is interesting.
But it's also a short-term impact. Savita, how do you think about any long-term implications? So beyond the selling of the long-term winners like big cap tech, then what? Does it have any real change for the market's direction and the sectors that you want to be in?
It's a really good question. So we've done a lot of work looking at tax rates and market returns, and it's very hard to find kind of a consistent, strong relationship. So I think that basically what we could see is just this sort of step function force selling pressure on some of these big winners, over the last 10 years that are popular in individual investors' holdings. But beyond that, it's really hard to say how a demonstrable hike in capital gains could hurt consumption trends or, other asset inflation trends that we've seen so far. Not a lot of data to establish, or not a lot of strong relationships to establish that one thing wins and another thing loses. I do think, though, that this really means that we're kind of tapering off in terms of the era of asset inflation. And, what we've seen so far, and we've all been writing about this, is the idea that we're moving from kind of, Wall Street to Main Street in terms of who wins and loses in this type of environment. And I think this is just another signal that we're in that sort of shifting towards a Main Street camp where the economy actually outperforms the stock market. So again, this is just another sign of that.
Shepard Smith here. Thanks for watching CNBC on YouTube.